Hey everyone, Tony here with another video lesson. Today was a historic day on the stock market, to say the least. Number one, made $4,000 on AIM, a single day trade. Called out the entry in the pre-market chat room, called out the exit in the pre-market chat room. Very, very awesome stuff. But not only that, but the overall stock market was halted for 15 minutes. Usually we just see these halts on these small cap penny stocks, but the overall market halted. That hasn't happened in, I believe, over 20 years. And that happened just because the S&P 500 was down 7%. So lots of crazy action today, but very happy with my trade on AIM. I actually called this out in the pre-market webinar with TradeBuddy. We first called out the 750 support and then the $7 support, averaging down into it. I talk about all that in the video lesson up ahead. But if you guys could do me a huge favor, please, if you enjoy this lesson, hit the like button and also hit the subscribe button. We are so close to 60,000 subscribers, and I want to see us smash right through that. So this is going to be a lesson on my trade on AIM. Like I said, just over $4,000 in profit. I'll put up a screenshot of those trades into the video lesson. And if you guys enjoy this or have any questions, please feel free to leave a comment down below, and hopefully you guys enjoy the lesson. Alrighty, so here we are in my screen share. Now this is the same exact screen that is shared every single day throughout market open within TradeBuddy. So for example, if you don't have the funds to buy scanners, if you just don't have a good charting software, you can look at my screen and see all of my scanners, all of the stocks that I'm watching, and see all the levels of support and resistance that I'm drawing on the chart. So that's very useful, and it's free to all TradeBuddy members. So AIM was the one that we talked about in the pre-market webinar. Like I said, we first called this out in pre-market, and the one thing I said was that watch for that potential support in the 350s. If 350s breaks, then look for support in the $3 area. And you can see I actually mentioned that in the TradeBuddy room at 5:30 a.m., which is 7:30 or 8:30 market time. I said it has support 350. If it can't hold that, then $3 support is my next level, and it was quite simply just based off of the 30-minute chart. Previous resistance holding as new support. This is my A+ strategy, and the number one thing that I teach within the room. This is the strategy that you will see me go long time and time again. But let's just break down AIM just to show how bullish it really is. So AIM actually has, AIM's float is around 7.71 million shares. So that is a decently low float. And AIM had news today. They had news where they said that their drug is going to be tested by Japan's National Institute of Infectious Disease as a potential treatment on the news SARS coronavirus. So as you guys know, I mean, hopefully you know by now that within this hysteria of the coronavirus, if any of these penny stocks mention the coronavirus in their PR headline, especially if they're making a vaccine, especially if they make face masks, especially if they make like testing kits, that is a very bullish news release, and you will usually see the stock just spike like crazy. So of course that news came out, and that just made it on the board for a first green day. And like I said, went to the 30-minute chart because this had recent trading action, and I just looked to see where previous resistance could hold as new potential support. We can see we had previous resistance here. You can use the 5-minute line chart or the 30-minute line chart to see very clearly that previous resistance near $3. You have the gap up above that, so we had confirmed breakout over that level, and you want to see that previous resistance hold as new support. And this is going to be a very important lesson for some of you, because you have to always consider the bigger picture. For example, one of the main things that I was saying is that if you're going to go long, at 350, you have to understand the bigger picture, because this could easily just pull down to $3 and it's still bullish, which means that like you have to consider the charts when you're planning your trade, when you're planning to take profits, and when you're planning to stop out. No one should ever be going long here at 350 and then stopping out into the 311s. If you do that, then you are not taking into consideration the bigger picture. And here's where I get many questions where someone says, okay, Tony, so if I'm not going to stop out into the low threes, what do I do to minimize my risk? And I'll say, okay, well, if you have a smaller account, then it's going to be harder for you to average down. So you want to go for the best like possible entry you can, meaning don't start entering into the 350s if you're not willing to add into the low threes. If you can only do one add, then try to get into the low threes and risk the break of like 280. And you can see here that would make you risk 10%. And most people would say, oh, 10%, that's way too much risk. But you have to consider the big picture of what's going on here, because if this like holds that previous resistance as new support, it is now having a huge multi-day breakout where it's holding previous resistance as new support. And whenever that happens, you just have to look back and see, okay, like where do we have previous resistance known? All you do is you go to the daily line chart, you mark off your levels. You can see we have one here near the 690s. We had one here near the 6s. You could go to the daily chart and just mark off those levels. And now you know, like if this is able to hold that previous resistance as new support in the threes, it's going to test the next resistance levels. Where are the next resistance levels? We have one at 613 and 678. So that means that your risk is, yes, it's 10%. That might be larger than normal, but your profit potential, if you just go for the first target, is 100%, 95%. And that is not unreasonable. We see these stocks go 100, 200, 300% in a single day easily. So you have to consider the bigger picture, mark off those levels on the bigger picture, and just understand that when the stock is still testing support, you have to give it some extra range to move around. Because if you don't, then you're going to get stopped out way too easily. And you're going to be stopping out into support. And you can clearly see what I mean here. Everyone who was going long off of this pre-market support and say the 340s, I really feel bad for them if they just left like stops underneath like 320 because they weren't paying attention to the bigger picture and they didn't know that there was massive support all in these low ones. And this was just very nice stop hunting here, where people were just not allowing this stock to move around, and they were getting stopped out too early just because they were so interested in minimizing their losses, when in reality they were like having stops that were way too tight, and it caused them to miss out on this massive move. Now, once you have one of those entries, like say for example you hop into this long at 330, right, and you're risking to break underneath $3. At that point, once you're playing this strategy of the A+ setup, where as long as previous resistance holds as new support, it's going to test the next resistance, you have to just excuse me, you have to have massive patience, where you know that as long as this support holds, it's going to continue to test the resistance levels. That means that you do not have to sell if it fails the first test. When it's within the initial consolidation, your main goal is you're either going to go for your target or you're going to go for your stop. And for example, what that means is that you're either going to let this have a test and break out, or you're going to let it stop you out for a small loss. The reason for that is because imagine that you plan this trade and you have a planned risk of 10%, right? And when you plan this trade, you think that you're going to be able to hold for a test of 6, but in reality, once you're in the trade, you get nervous, you get emotional, and you see this retest the 4s one time, and you see it start to pull back, and you see it break VWAP, and now you think, oh my gosh, it's gonna fall apart, and you sell there for 16% profit. Well, now your risk reward ratio for that trade was you're gonna risk 10% and make 16%. That is not a profitable risk reward ratio. You have to either let the stock hit your target or let the stock hit your stop. And realistically, all that means is that you have to understand that these charts take lots of time to develop. When you're looking at them in hindsight, you can see all the information at once, but just keep in mind, like this whole move, like to retest the resistance in the 690s, it took from 930 all the way till 1250. That's a lot of time to develop where you just sit and wait and look at the charts. And from there, you definitely want to lock in partial profits into the resistance. If you look at my profit chart, that's exactly what I did. I paid myself half profits into this resistance in the 640s. And then from there, I actually kind of messed up. The main thing that I was thinking was going to happen was this would retest the previous resistance as new support near $4. And I said, okay, if this can't hold 5, then I'm gonna lock in the rest of my position and add back into the 4s. And you can see I actually got caught within a bear trap where lots of people, they sold because they saw this break lower lows. However, then it immediately reclaimed and started uptrending. And that caused a very nice trap scenario, because that means that whoever sold here, whether they sold long, whether they sold short, once they see the price move back up and especially break out, they're going to get lots of FOMO, and they're going to want to buy back in, especially if they're short because they're actively losing money. Longs, they want to buy back in because they're missing out on potential returns. And you can see from there, it squeezed up massively into the 8s. So even though I made $4,000 on this trade, I'm still learning every single day. I'm constantly refining my craft, and you know, always have to learn more. So alrighty, hopefully you guys enjoyed that lesson. If you did, do me a favor, leave a like, leave a comment down below of any questions you have. And if you enjoyed this type of content and want to see more lessons in the future, do me a favor, hit the subscribe button. And you know, hopefully you guys were able to kill it today in the stock market. Gonna keep seeing continued hype and hysteria in the small cap sector. Like I said in the lesson, if you see any stock relate itself to the coronavirus pandemic, as long as this situation keeps getting worse, we will continue to see these stocks make crazy moves. So just focus on the big picture. Don't get stopped out too early. Let the stocks run when you're right, and you know, make profits along the way. All right, thank you guys for watching, and I'll see you in the next one.